Hello, everyone. This is Martin. It is early Sunday afternoon, and we have some trading opportunities for you for the week for December the 14th to the 18th. And remember, this week, really, really important. On the 16th, the U.S. Federal Reserve, the government is going to be most likely raising up their interest rates, and that's on the 16th. So watch out for that. That could create some huge volatility for some of the currency pairs. And if you're not sure, then don't trade. But certainly have your eye out, or when you do get home from work, take a look to see what actually happened. It'd be a lot of fun to see what happens when the U.S. raises their interest rates, because all the major currencies in the world are pegged against the U.S. currency. So it is going to have a huge impact. And so we're going to start here with the Euro USD. Now, the other thing is with the possibility of the Fed raising their interest rates, some people are saying that the price right now has already been factored into the rate increase, and in fact, some currencies may even react in a negative way, or in an opposite way to what they should be doing with the rate increase if that does so happen. So again, like I said, it's going to be fun watching, and the best thing perhaps is just to watch and then react after the day is finished. So starting with the Euro USD, let me just do this. Last week, I mentioned that we were in a range volatility. The start of the trading week was right here with this black candle. This is the end. This red line is the Friday close of the week before that. So this is the start of the trading week. We have 1, 2, 3, 4, 5 trading candles, one candle for each day. You can see that right here. But in fact, price went down, bounced off the previous support. You can see that with the gray rectangle. And then the next candle you can see right here, we had a nice engulfing candle, which means that price has bounced off. It's reversing, and the uptrend is continuing. Why do I say uptrend continuing? Well, price started down here, went all the way up, jumped from this price zone into this price zone, you see right here, and now it's retraced. When with a pullback, we look for a bounce back in the same general direction as the overall trend, which is here. It's up, and right there, if you would have gone in right there, that would have been great for a risk to reward 1 to 2. Fantastic trading, and that was good for about 130 pips. That's if you would have entered right there, your stop loss would have been right there, okay, below the 21. So that's about 97 pips, and it went up in total for around 160 pips. Okay, so now price is now closed above the 50. See, this is the blue line right here. And what's really interesting, price has come back down, and then price is now ready to bounce up again. The 50 SMA has to hold. So if price has to hold above that for price to continue higher. But I want to once again go back to last week's trading, and I want to switch the chart to the H4 chart, which is the 4-hour chart, to show you a fantastic 821 EMA trading strategy, trading entry. Again, the previous week before that, price went up. That was the based on news. Now, in a pullback, remember what I said. Watch for a pullback to come back to the 8. Here's the 8. Here's the 21. Okay, right there, 21 EMA. Price pulls back, bounces off the 21, and it's on its way higher. But I've already drawn in a trend line, and with this candle, you see that candle where the mouse is pointing? That breaks the trend line. Get in at the open right there. Your stop loss is just below the 21, and bingo, you've got a really good trade setup. Let's take a look for a second. So get in at the open right there after the huge up engulfing candle. Using your crosshair, we see it's about 76 pips risk. and it went up in total about 138. So a good 1 to 2 risk to reward right there. Okay, so very easy trade setup to take a look at, and that's the 821 EMA strategy. So this week we're in the uptrend continuation. You can place a breakout entry above the 1050, 1055. When I say place a breakout entry, that would be a buy stop, pending buy stop above the 1055, which is this level right there. Okay, so even though price is here, if price breaks above that, then it's going to go higher. Also, watch the 50 SMA for support, which is right here. So as price is perhaps going to be going sideways a bit, this blue line has to hold. If price ends up closing below the 50 SMA, then you can almost take a counter trend trade to the south side. Okay, now we get into the British Pound USD daily, and you can see that again, just like the euro, same thing. Price bounced off a previous support with a huge news candle right there, and then at the beginning of the trading week last week, price went down, 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 and bounced again. Um, this is a bit of a pin bar, bit of a clue that the buyers are coming in. Okay, see this long wick to the down on below the candle. That means buyers are coming in, and of course, right here we have this huge engulfing candle. So, with a huge engulfing candle and a bounce off the support area, we would get in at the open right there. And if you would have taken a trade right there, then you would still be in profit and possibly still in the trade unless you've closed your trade. But if you're still in a trade, perhaps just hold on to it. Price will most likely go a little bit higher to test the trend line right here at the 52.50 level. Okay, so last week we did have two trades, very good. The first trade was, you see, price went up. It did not close above the 21 EMA. Price, in fact, bounced back down. And again, um, a lot of times you can take a trade right after a rejection off of a trend line here. If you would have gotten in at the open right there, you would have made some really excellent pips. But even this one right here, this is kind of a warrior candle. So it closed below the open of the previous candle right here. If you would have gotten in at the beginning right there at that level, price would have gone down for about 100 pips, went back up though, and closed right here, and so you still would have made about 50 pips. Okay, so that was the first trade, and the second trade I already discussed. This was the huge engulfing candle, huge rejection by the buyers pushing price all the way higher, right above the 21 EMA, and that would have been the second trade. Okay, so now we get to the Australian USD. And in this one here, we mentioned that wait for evidence to the upside or bounce down off resistance. Well, in fact, last week, price went down all the way down to a support area. I said wait for evidence to the upside. We had the evidence for right there. However, um, that did not really give us a good trading opportunity. It was not a warrior candle, so I would not have entered a trade at all. And now price has gone back down below the 50, which is the dark blue line. Okay, so the other thing is right here, however, this was a pretty good trade. Here's a doji. The close this was the close of the previous Friday to last week, okay? And that was a doji. And right away here, the next candle was in the bearish engulfing candle. So you could have gotten in right there at that level. And yes, you would have made some pretty good pips, around 82 pips profit on that one, okay? So for this week, we have a sell breakout below the 71.60. So price breaks out below the 71.60, I would say price is going to continue going further down toward at least to retest this trend line and this gray rectangle. Okay, so you can place a sell stop order below 71.60, 71.55, and If your trade is taken, then it most likely will go down further. The other thing is watch the 50 SMA for resistance or support. Right now, price is just below the 50. Okay, that's the blue line right here. So again, you can wait. You can wait and don't trade right away on a Sunday, which is today. Just wait to see what happens, and then tomorrow take a look to see if this blue line, the 50 SMA, held as support or resistance, and then make your move after that. Okay, so price may in fact go back higher, and that means the 50 SMA holds, or price may continue going down lower. Okay, now we have the New Zealand USD. And last week I said we were in a triangle consolidation. There's the lower trend line, upper trend line. Price was just sort of going sideways, and I was waiting for a breakout. When price is in a triangle consolidation, you always wait for the breakout. Here's the breakout right there. However, the next day, and it closed on Friday of last week all the way down. This is a bearish engulfing candle. It is a reversal signal. Okay, so we have an up candle with a pin bar. We have a bearish engulfing candle. I would almost take a sell trade right now in the hope that it's going to come down at least to retest this area right here. Okay. However, we are in an uptrend, overall uptrend, but we are, I believe, in a pullback phase. So we jumped from this price zone between support and resistance. We jumped from here, price jumped from here up to here to a higher trading zone. But however, now we bounced off the resistance, and we probably are going to go back into a pullback phase, or until at least the rate increase by the U.S. Fed on December the 16th. Okay, so I expect kind of a pullback, and again, wait for price to come back down lower, and then wait for a bounce up higher. Okay, so that's waiting for evidence. Now we've got the U.S. CAD. Here, the U.S. CAD, is a really interesting pair in the sense that it's just rocketing skyward. It's already gone past the previous 2015 high. You can see that right here. Okay, and in one of my previous videos, I mentioned that most of the currency pairs were going to be retesting their 2015 highs or lows. In this case, the Canadian currency is one of the weakest right now against the U.S. It's just continuing to go much higher. Here's the long-term resistance at the 138.50, 139.00. I believe price will go higher, and we do have a huge warrior candle. However, I'm going to say caution right now, just because the Fed decision on the 16th. I'm going to kind of say that price is now going to pull back, pull back, pull back. Uh, it's just gone up too high, too quickly, and it's far away from the 8 EMA, so it's got to come back down. So I would say caution. Perhaps don't trade this just yet. Wait for a pullback. Wait for the rate decision on the 16th. Okay. Now we've got the U.S. Swiss franc. This has gone the opposite. And the interesting thing is the U.S. Swiss franc is always opposite correlation to the Euro USD. So in this case, prices come down, down, down. It's tried to retest previous resistance here. It's bounced off of that, and that's where you would have taken a great trade opportunity. Do you see that we're downtrend? We're looking for a pullback. We're looking for a bounce right off the resistance right there, and that is in a bearish engulfing. So uh, now you see the 50 here. So you could have opened a trade, but we were still above the 50. So what would have been the smart move would have been to place a pending sell stop order just below the 50, right about there, and you still would have made about 80 pips. Okay, so I expect this week we're still in a downtrend continuation. The Friday's close was an engulfing candle. This is Friday's close. We have a bearish engulfing candle. And again, watch out the 8 EMA for resistance. So if price goes up higher, the 8 is now coming down and will most likely soon cross the 50 to the downside. So watch the 8 and the 50 as resistance, okay? And I just want to switch the chart to a 4-hour. Now, this is really interesting, folks. So this is a 4-hour chart of the same pair. US Swiss franc. And again, we're talking about the 8 and 21 EMA strategy. And you can see downtrend, pullback. Your entry would have been here or here based on this, and you would have made some pretty good pips. That's it. Happy trading. Be careful.